So there's an annual gift exemption of £3,000 that each individual can give away per tax year. So for a married couple, that's £6,000. However, if you've not made any gifts in the previous financial year, you're able to roll the £3,000 each forward to the current tax year. So technically, a married couple could give away £12,000 to whoever they wished, and that sum would be immediate outside of their estate for inheritance tax purposes. So as you see, it's a very useful planning tool if you want to make gifts to children, grandchildren or other family members. I would stress that as you're not around when you pass away, your executors have to deal with your estate and fill in a set of accounts reporting your estate. So I would advise you to make a note of any gifts that are made and also write to the recipients of the gift so it's absolutely clear that you are making a gift. In addition to the annual gift allowance of £3,000, you're also able to make gifts of £250 to any number of individuals. This can't be aggregated with any gifts you make to children or grandchildren in respect to the annual gift allowance. So for instance, if I gave my daughter £3,000 this tax year, I can't then give her another £250, although I could give my friends or other relatives £250. If I was lucky enough to have an estate worth £1 million, I could actually go outside front door, find 4,000 people, give them £250 each, and my estate would pass completely free of inheritance tax, although I suspect the men in the white coats might come and take me away shortly afterwards. A parent is able to make a gift of £5,000 to their son or daughter upon marriage. That's per couple as well. So effectively a married couple could give away £10,000 as a one-off event in consideration of marriage to their child. For gifts to grandchildren, that's limited to £2,500 per person. So again, a married grand couple could give away £5,000 to their grandson or granddaughter, and you can also give away £1,000 in consideration of marriage to any other individual as well. Again, it's sensible to write to the recipient of the gift and say that this gift is in respect of marriage, and if the marriage doesn't go ahead, then you want the money back. It sounds a bit harsh, but it just makes sure it's clear that it actually is in consideration of marriage rather than any other sort of gift. I want to focus on gifts out of income now. Unlike the other exemption that I've discussed earlier on, regular gifts out of income can be made without any potentially upper limit on the amount of gifts. It's really the only limitation is your own personal circumstances. So if you do have excess income from pension income, earned income or taxable investment income, that can be given away, and there's no upper limit on what can be given away, provided it meets certain criteria. The main ones being that it doesn't affect your standard of living on a year-by-year basis, that you're making the payments from income rather than capital. So for that, I would suggest that the payment is made out of the current account or the bank account where your pension income or your savings or investment income is paid into. Then it's clear that you're not making a gift from capital. Importantly as well, the gifts must also be regular or habitual and part of normal expenditure. Now, to qualify for being regular doesn't necessarily have to mean they're made monthly. They could be made quarterly or annually, whatever's more convenient. And I find when I talk about this to people, it's a really useful way and an underused exemption for wealth to pass and cascade down the generations. Some potential uses for the gift out of income exemption could be funding regular mortgage payments for a child or grandchild, could be paying towards a life assurance policy that could pay out in the event of your death and help your inheritance tax liability. It could be making pension contributions on behalf of your child or grandchild, or it could just be topping up their regular income as a child or grandchild might need some help with other expenditure as well. Different to regular income out of expenditure rule is there are maintenance payments to children in education and also to your spouse or ex-spouse. These are exempt and aren't covered under this particular rule. Again, I would suggest that you make a note of the gift because it makes it much easier for when you pass away. So we talked about four exemptions and making gifts, but that's by no means an exhaustive list. Gifts can be made all year round, and I would suggest if you want to look at more further estate planning, larger gifts, trust planning, that you speak with your courtier's advisor. Who'd be more than happy to help you.